Hello, this is Binni here. Today, this video is on exchange traded funds on bonds and interest rate. The reason of talking about this topic is because last night, we saw that Fed cut rate 25 basis point. Right now, the Fed rate is 3.5 to 3.75, and the market is expecting that next year, 2026, we're going to have 2 more rate cuts. So in a way, it is a declining rate environment. And what does a declining rate environment implies to our investment? At the same time, what does it mean to the bond market? For this, let's take a look at the key interest rate movement in Singapore, US, and as well as China. We saw that both Singapore and China, the interest rate has fallen to 3 years low. For SORA, it's about 1.46%, and for China, it's about 3% respectively. As I mentioned earlier, Fed cut rate by 25 basis point too. The direct implication of a lower interest rate is a higher bond price. This is because when interest rates fall, the newly issued bond offer lower yields. Then this will make the existing bond with a higher yield more attractive than the new issued bonds. Then, as demand for this older, higher yielding bonds increases, their market price will also go up. In Singapore, there are different types of bonds. For example, there's this public listed corporate bonds that are usually MAS regulated offers. Now, these are bonds that anyone can buy because the bonds is offered to the public. For example, they will be the Temasek Link retail bonds, the SIA retail bonds. Now, however, the more common type of bonds would be the corporate bonds that's offered in the wholesale. To buy this, you need to qualify as an accredited investors under MS rule, and that usually means that your financial assets would be more than 1 million in cash or investment, or if you do own, for example, a house, then it will be a total of 2 million net assets, including your primary residence, which is counted as up to 1 million only. Then exchange traded funds, which are listed in the exchange, offers another solution. If one do not want to just buy into one particular bond, you want a basket of bonds, and that's where the fixed income ETF that's listed in SGX provides diversification, provides liquidity because you just buy and sell like a stock, and of course it lets you access into different bond types. Documents from SGX shows that there is a 165% increase in terms of turnover, and as well as there's a net inflow of 183 million. There are different types of ETF bond funds available to trade in SGX. Now here I have chosen 3, which gives a bit of a diversified income strategy for you. They are not meant as financial advice, but I just thought that they are quite diverse and chosen 3 here, which offers different focus, different flavors. The first is ABF Singapore Bond Index Fund. The stock code is A35. It consists of Singapore bonds. Just as information, Singapore is the only Asian country awarded the highest AAA credit. At the same time, if we take a look at the funds, the sector allocations, we can see that they are all mostly from the Singapore government. The second is ICBC CSOP FTSE Chinese Government Bond ETF. I've chosen this because of diversification. I mean, to diversify into different markets. That's the only intention here. Some key fundamentals in terms of the funds for you as a reference. You can pause the video right now to have a closer look. The third is the USD Asian High Yield Bond ETF. As the name suggests, it's targeting higher income potential in Asian credit. That means it's offered in USD and SGD, but it's from bonds of Asian governments and corporations. The focus would be on high yield. Here would be some of the top issuers, for example, Nissan Motor, Sri Lanka, etc. So as the name suggests, high yield bond funds means of higher risk here. Let's take a look at the 3 fixed income ETF that's listed in SGX. Again, it's not a recommendation for you to do anything, but just to list down 3 different flavors. To the first one that I've talked about would be Singapore bond funds, and the average credit quality is AAA, and with this it's viewed as a lower risk, and hence the dividend yield would be lower at about 2.2%. Then we have in the middle, which is CSOP, where you have diversified exposure, and that's a collection of Chinese government bonds, and that would be in the range of 3.09% in terms of the yield. Again, that is a higher risk if you compare that to the Singapore bond funds. All right, and of course the highest yielding would be at 7.26%, but the average credit rating is BB and below. This would be the iShares USD Asian high yield bond funds. So 3 different profile and 3 different gross dividend yield, and it is up to you to decide which you prefer, which would be more suitable for your investment. Again, that you can move beyond whatever that I've listed here. It's just as a reference for you to make a comparison of what you might want to include for your investment. Okay, so just remember that the higher the yield, potentially, all right, it might have a higher risk rating. Hello, this is Binni here. Today this video is on exchange traded funds on bonds and interest rate. The reason of talking about this topic is because last night we saw that Fed cut rate 25 basis point. Right now the Fed rate is 3.5 to 3.75, and the market is expecting that next year 2026 we're going to have 2 more rate cuts. So in a way it is a declining rate environment. And what does a declining rate environment implies to our investment? At the same time, what does it mean to the bond market?